AlphaTac's secular bear market investing strategies enable a portfolio to grow against the wind. The secular bear investing strategies include utilizing algorithms, including AlphaTac's BBT algorithm, to trade long-short index ETFs. Another of AlphaTac's algorithms is Meta, which utilizes a diversified ETF allocation system. Buying and holding shares of small companies, IPOs, and startups are successful during secular bears. Finally, short selling or put option strategies can be successful. Each of AlphaTac's trading algorithms have the capacity to trade $50 billion and have low trading frequencies. BBT is a trend trader, which trades long-short index ETFs. A position can be held for days or even weeks. The positions of Meta, a diversified asset class allocator, are held for weeks to months. The two provide a portfolio with industrial strength diversification. The BBT algorithm trades S&P 500 and Dow Jones ETFs, etc. They include the long SPY and DIA and the short SH and DOG ETFs. This chart shows a decline of 44% for the Dow Jones Long DIA ETF from September 15, 2008, when Lehman Brothers filed for bankruptcy, to March 9, 2009, the bottom of the 2000-2009 secular bear. This chart, which covers the same period as the prior chart, explains how an investor can make money from trading inverse, also known as short ETFs, in a declining market. The chart depicts an increase of 40% for the Dow Jones DOG Inverse ETF from September 15, 2008, when Lehman filed for bankruptcy, to March 9, 2009. This chart depicts the performance of the BBT algorithm versus the S&P 500 for the year ending 2020. BBT generated a gain of 100.29% versus a gain of 13.48% for the S&P 500. The highlighted yellow column, which covers the March 2020 crash period, explains why the BBT, with its short ETFs, generated significant profits while the S&P 500 generated substantial losses. This chart depicts the performance of the BBT algorithm's actual and back-tested results versus the S&P 500 for the 3 years ended 2020. BBT generated a gain of 195% versus a gain of 36.48% for the S&P 500. The highlighted yellow column, which covers the worst performing fourth quarter of 2018 and first quarter of 2020, again explains why the BBT with its short ETFs generated significant profits while the S&P 500 generated substantial losses. The Meta algorithm invests in the bond, cash, equities, precious metals, real estate asset classes. Meta is ideal for preservation of capital. This is the list of the 9 ETFs which Meta trades. Shown here is the Meta versus the S&P 500 for the first quarter of 2020. The Meta's maximum drawn down or decline for the quarter was 5.5%, and it finished the quarter with a slight gain. The S&P 500's maximum drawn down or decline for the quarter was 33.1%, and it finished the quarter with a 19.4% loss. Most importantly, the Meta, according to its back test, produced a gain of 66% during the 2000 to 2009 secular bear market. This compared to the S&P 500's loss of 56%. Long-term capital gain opportunities during secular bears and recessions are exclusive to small or new companies. Since the S&P 500 and NASDAQ are trading near the 2000 dot-com bubble highs, the probability of a decline to induce an economic recession is high. This chart depicts the 4 recessions since 1967 which were induced by the S&P 500 declines, including the 2000 bubble burst, which preceded the 2001-2002 recession. Startups, small companies, can grow during secular bear markets and recessions. There isn't room for a big company to grow in an economy which is not growing. IPOs were among the rare winners during the 1966-1982 secular bear. The brutal 1966 bear at 16 years was the second longest ever and only behind the 1929 bear. This chart depicts that Walmart had stores in 5 U.S. states in 1972. This chart depicts that from 1972 to 1977, the states that Walmart had stores in doubled. This chart depicts that from 1972 to 1982, which was also the end of the 1966 to 1982 secular bear, the states in which Walmart had stores in almost tripled. From its 1972 IPO to the end of the secular bear in 1982, Walmart's share price increased by 672% versus a decline of 5.59% for the Dow. Walmart annihilated Sears, another poster child to not buy and hold shares of big blue chip companies during secular bears and recessions. From when the Sears Tower opened in Chicago in 1974 to 1982, which was the end of the 1966 to 1982 secular bear, its share price declined by 50%. From its 1978 IPO to the end of the secular bear in 1982, FedEx's share price increased by 224%, versus the Dow's increase of just 9.94%. From its 1981 IPO to 1982, which coincided with the end of the 1966-1982 secular bear, Home Depot's share price increased by 194.7% versus the Dow's increase of 11.1%. From its 1970 IPO to the end of the secular bear in 1982, McDonald's share price increased by 366.1% versus the Dow's increase of 24.6%. Michael Markowski's 44 years of experience includes his being a Wall Street investment banker. In 1986, he underwrote the Almost Family's venture stage IPO. In 2018, Almost Family merged with the LHCG Group. The company has steadily reached all-time new highs. Since Almost Family's IPO, its annual revenue had increased by 185 times to $796 million when the merger was consummated in 2018. As of 2020, share price had increased by 37 times to $75. AlphaTax's provider of startup and pre-IPO investment opportunities is its parent, Dynasty Wealth. Here is a 5-minute video interview of Michael Markowski at New York Stock Exchange about Dynasty Wealth. It's available at AlphaTax and also on the homepage of Dynasty Wealth, which Michael is a director of research. In the interview, Michael explains the types of investments which can grow by 1,000% to 10,000% within 5 years. Dynasty Wealth identifies digital disruptors and first movers which accept investments in increments at or below $5,000, which are needed for portfolio diversification. The Jobs Act created a new cottage industry for startups investing. The act enabled the world's entire population to invest in private startups. Prior to the Jobs Act, only accredited or high net worth investors could invest in startups. It also allowed a secondary market for the shares of private startups to be established. This Modern Private Company Secondary Market Poised for Growth banner is from NASDAQ's website. It underscores the significance of the new secondary market for the shares of privately held startups. This page resides at Net Capital, one of the first SEC-regulated private startups investing portals to open a secondary market for startup shares. The page shows startup, the date the offering closed, the purchase price, and the appreciation of 233.33% for the private startup's shares on Net Capital's secondary market platform. All 4 of the startups on the page have gains. The gains for 3 of the 4 are above 80%. Here is the published offers for the shares of the startups on the page. This table contains examples of the types of digital disruptors and first movers that Dynasty Wealth endeavors to find. The valuations for all are from when they were founded to December 31st, 2017. A $10,000 seed round investment in Airbnb in 2008 was valued for $200 million in 2017. $10,000 invested in Uber in 2010 was valued for $135 million in 2017. $10,000 in WhatsApp in 2009 generated a capital gain of $73 million when it was acquired by Facebook in 2012. A $10,000 seed round investment in Snapchat in 2012 was valued for $16 million in 2017. One of Dynasty Wealth's private company video recommendations was StartEngine at $5 per share in 2017. The title of Dynasty Wealth's video: StartEngine shares have potential to multiply by 8 times as a crowdfunding first mover. Based on StartEngine's $11.25 July 2020 offering price, which was filed with the SEC, the share has more than doubled since being recommended by Dynasty Wealth. Now that Start Engine is airing commercials nationally featuring Shark Tank's Mr. Wonderful, Kevin O'Leary, as its spokesman, the Start Engine brand is becoming ubiquitous. Thus, the share price for Start Engine will likely increase by 8 times much sooner than Dynasty Wealth has projected. Due to there being a limited number of seats, view time is of the essence to get aboard AlphaTac Lifeboat. To not miss out on having your portfolio in the position to grow throughout the secular bear market, and especially to get access to the currently limited, exceptional startup opportunities, click to go to alphatac.com.